Behind me is a short sale information package. Next to it is a package we recently used to have a deed in lieu approved by Chase. And I'm going to explain to you the pros and cons of a short sale, what makes a good one, what makes a great one, and why a deed in lieu can be even better. There's so much to cover. I'm doing this live without a script that I don't really know where we'll end up, but I'm going to tell you in the beginning, just so I get it done, because I promised to tell you this. I'm going to tell you that in the beginning of the last market, we got a lot of deeds in lieu done. The 15, 16 years ago, I started Upside Down Real Estate.com in 2007. The California Association of Realtors saw how many short sales I was doing. I believe that's why they called me. And they asked me to train realtors on how to list and sell short sales. And the bank pays the realtor fees for short sales. So realtors make a lot of money in short sales. I'm a real estate attorney and a broker. And believe me, I made a lot more money doing short sales where the bank was paying than working with clients doing deed in lieu. But for some people, starting with a deed in lieu was the way to go. And for some people, they'd start with the deed in lieu and then it would go into a short sale. And if the short sale eventually got approved, I could then refund the money they paid for the deed in lieu because we did a short sale instead. So, but I will say that for many people right now, people who have, let's say, concerns about their credit, they're if they can afford it, they probably want to start this transaction with a short sale. And I'm gonna go through the whole process, but let me explain why I believe I found it to be easier to get deeds in lieu done on our clients' terms rather than a short sale. It's because with a short sale, there will be this information. The bank is going to see. Oh wait, that's not the one I wanted. Where did it go? Oh, here, yeah. They're going to see the listing agreement. They're going to see the listing history. They're going to see the sales purchase price. They're going to see comparable listings, and they're going to see the HUD. That's how much they're going to net. So it's very hard for them to say to their investor, hey, we're getting short $100,000 on this deal, but let's go ahead and agree that the client's paying us in full as if they sold the property and they paid us a few $100,000. This is not the short sale remark on your credit report would be legally settled in full for less than the full amount. That's what the banks seem to be getting away with under law. I totally disagree with that legal rulings. It does not seem right under California law. It seems inconsistent with other laws. But this is apparently what's been tested. The credit bureaus are allowed to have this little remark that they all know means, yeah, California law says it's going back for the full amount, but we didn't get the full amount. So that's what a typical short sale remark is. The remark that I've heard every realtor who's ever done this has achieved. And I'm saying I could see why it would be hard. It is hard. Like we have to really dispute this debt and threaten lawsuits as an attorney or ask them for things that they didn't have in the file back then. A lot of times they couldn't even find the signatures on the loans. So they had problems. And that's why some of our clients got to stay in their home really until 2 years ago. We had one that went about 10 years before they finally agreed to the short sale. We got to do it at 8-year-ago prices. And I had a few people that lived in their property for 3 or 5 years before the bank had foreclosed because they couldn't produce the information that they needed. But most people, they maybe got an extra 6 months to a year in the last because, you know, they had those robo-signing issues and all those other issues. And so, yeah, I mean, you have some angles, but I'm going to say that it is difficult because the bank sees cold, hard numbers. Hey, the lender has a loan for $1 million and we're only netting 900. I mean, it's going to be hard to say, yeah, you're taking this back as paid in full and not damaging the client's credit. Whereas a deed in lieu has the advantage of we don't really know the market price right now. So if we can position the client when they fill this short sale package out, the RMA, and every lender's different. And sometimes my clients are like, I don't want to fill all that out. It's too revealing. And I'm like, okay, well, let's use our customized package that hits all the spots, but might not be as revealing. We'll put that together. And since it's a deed in lieu, we can customize it. And then here's where the magic happens. You do the normal package the bank's expecting. You customize it in the way you want. Like I might not want to use Chase's forms. I'm going to use my custom ones. We do something a little better. We would generally, if you have a hardship, we would generally fill this out, but also say, see attached letter from homeowner. And we're going to do all the things. We're going to have the homeowner explain a lot of different things to the bank in a short letter. Like one of them, I will agree to leave the property in broom swept condition. I will show pictures. There's things that we put in there that's sort of the magic sauce for the homeowner. But more importantly, we position this all, and then I have a separate letter, and I explain California law, because remember, these people are many, many times servicing these loans from other states. The first level of the bank is really the collections department, and they're looking at this, and they're trying to figure out how much they were going to recover and whether they should approve it, and it's just all matter of fact for them, and they don't really care whether you're in California, generally. Maybe they will in the middle of this, but they don't care whether they don't even know. They're just like, hey, Florida, California, doesn't matter. Do we want to approve this short sale? And does our investor agree to release people from the deficiency? If so, we'll put that in writing. In California, then when we get those approval letters and they're not good, or we already know they're not going to be good, we say, hey, by the way, we're going to want to make sure that this approval letter mirrors California law. We need to see this. Please let your investor know we need to see this language. If they don't want to do that, this might not work. Now, there's a right time to do that with the right banks and the right people. Generally, I need people on the stand who are they're not just sentient beings, they're actually thinking people. And if I'm just dealing with a sentient being, I sometimes have to do other things. I start asking for more questions, more data, until I get moved up the ladder, and I talk to an attorney. So let me just say, in short, what we did with a client very recently, within the last month of when I'm recording this, is my client did have good reasons. She had a good hardship. And we can usually find good hardships. A hardship is that I just don't want to pay anymore. Let's put it that way. Then, you're going to look for these boxes. These are boxes they generally accept, but it's not always necessary. We've gotten short sales and deeds in lieu done without those boxes. But then we explain why, because, we understand servicing rules and guidelines. We understood back then there were different tranches, and sometimes the investor controlling the whole loan workout package was controlling for the first tranche, and they got no benefit. They weren't going to see any of this money anyway. So what did they care? And they didn't say so. So at that point, we have to start appealing to California law, the Homeowners Bill of Rights, the Servicer's Guide, the Servicer's Rules. There are duties to explain things to the investors. Sometimes I had to say, who is the investor on this? Let me contact them. Sometimes they say no, and we're like, okay, well, then we're going to take a foreclosure, because you always want to know your downside. Not every short sale gets approved. Not every deed in lieu. In fact, only about 50% of real or short sales were getting approved in the last market. So you always need a downside. Like, what happens after a foreclosure? What happens after a deed in lieu? What happens after a short sale? What I'm saying now is deed in lieus are cool because you can customize your result. So my client wanted to do this while she was current. Very few short sales with realtors are done while they're current. And my client wanted, we expressly wrote in our request for deed in lieu that the mark would be the same as the mark she would get as if they were paid in full after the sale of a property. And I said, and I understand, because I know that this is experience. In other states, they're not comfortable with deeds in lieu because they're worried that they would get better title after a foreclosure. They're worried about liens, juniors, all sorts of things, and rightly so. So as an attorney, I say I will work with title, and if necessary, we will pay to make sure your title insurance, your title is as good as a foreclosure title or better. Like, that's one of the important things to explain. We have to explain that multiple times on the phone sometimes. So anyway, we put our short sale package together. I explain all the financial benefits my client's foregoing by doing this now while she's still current, instead of waiting the 121 days at minimum for the California foreclosure deadline. The additional 4 months that she will now have because of the federal cooling off period combined with the meet and confer period. It's in there. But you're looking at 120, another 120. Then we're looking at potentially 45 days for AB 2024. And the fact that I had to explain when I was on the phone. So now let me just bring you there. So we did our short sale. We explained the laws very clearly and succinctly, why my client will be, in order to do this deal, we're making a great deal for the investors. She is foregoing, let's say it's, just because I don't want to give away her numbers, $100,000. Let's say it was $10,000 a month or $9,000 a month. We're foregoing $100,000 in income over the next year that she wouldn't have to pay, that she could be saving towards down payment on another property, or could be using for rent, saving up so she can pay the rent in the future. She is not, or just the benefit of not paying $100,000. She's foregoing that, the ability to live in this house for free for a year. and your investor's also saving the risk that some point in time, like during COVID will stop. Well, they'll ban foreclosures. Like that's an unknown that your investor cannot handle. And then we explained all the other benefits that the investor was going to get by getting the property back now, and that they weren't going to have to kick a renter out, because I told the guy when we got on the phone, we were talking. So let me now bring you in. We asked for a great workout package for a client. And I'll bring you up to speed now. So I send it in. Typically, they tell me, well, it's going to take 2 or 3 days for us to image your authorization from your seller so you can talk to us. Okay, so I call them back 3 days later. Maybe it was 2. They're like, okay, you're authorized now. So then I have a discussion with like the gatekeeper, just find out it's legit, what's going on in the file. She's taking notes. She's asking me a series of questions that they ask every time I'm on the phone. And I always answer truthfully and what I'm authorized to answer and what I'm not. And then I'll get back to them if it's important with answers from my client. And that's where we got. She goes, well, we're going to get it over to the department, and your customer relationship manager at one point, maybe it was the next call, is so-and-so. So all this will happen in the first week or two. Then we have now sent in the short sale package. First you have to send in your authorization, then you send in this package. And in my case, it's this package that we've customized and our request for deed in lieu, the standard way, and then all the reasons why we believe the investor should take this back now. I leverage the law. I explain it to him. I'm like, my client's not going to owe, regardless, we're not going to owe the bank for the deficiency because of this law. She's not going to owe taxes because of this law. She's not going to owe taxes in California because California mirrors the feds. So really, the entire file is about credit. My client would like to minimize the damage of her credit in exchange for not damaging her credit and accepting this while she's current and taking it back in full settlement with no damage in credit remark. Your client gets all these benefits. And I explained them all, including the time value of money and everything. And I put that together. So now it's very clear. So I call up, my customer relationship manager's not there. A guy picked up on the phone, kind of a gruff, New York-ish voice, like, being from Connecticut, I sort of recognized it. It wasn't really your typical New York voice, but it was a little New York. And he gets on the phone. He goes, oh, I see your package here. And the usual, well, it's not all together. You don't have your loan number on every loan. And I mentioned this to my client. So she had written it on every page. But I didn't correct them. Like, that's one of the things. You have to accept the fact that they have their little games because they're trying to keep their clock extended. They have a certain amount of time on their service guidelines, and they want to get paid. And so they're going to play games and say, hey, your file's not complete. Do it again. And you're just like, okay. So you learn not to challenge them. You just say, okay, I'll get into you immediately. You think I'll be able to call tomorrow? Like, you work with them. And so he's giving me the old, it's not complete yet. But why don't you tell me about it? He told me about his 15 years of experience. So I was like, this is great. So I had a little conversation with him. And I said, well, I'll tell you what. I realized all the banks had a preference for short sale towards the end of the last market. But I remembered in the beginning of the market when we weren't sure how far down prices were going and things were a little iffy, that we could do deeds in lieu for our clients where they were either current or after it got approved. They said, well, we can't do it while you're current, but we'll take only one 30-day late credit ding. And I go, so that's sort of what we're after here. We prefer to do it while we're current, but we could do one credit ding. But really, what this is all about is my client is foregoing all of this, as you can see in there, right? All the benefits, all the things she receives in the California Homeowners Bill of Rights, and the extended timelines. I go, she's willing to forego all that benefit. And all we're saying is that you let us give this property back to you and not have her credit damaged. Your investor is going to get a tremendous. I was like, I don't understand how an investor wouldn't do this. I said, absent some odd, I said a market distortion mechanism, like they'll get paid more insurance after foreclosure than they would after a short sale or deed in lieu. I said, otherwise, I don't understand, and here's why. And I very clearly laid it out for him. And I said, so my client is not. This isn't about the deficiency. There's no way my client's going to make that mistake. If we did a short sale, the approval letter is going to be perfect, or we're not going to do it because this is a 580B loan. Foreclosure is a possibility. She's considered it. She won't owe taxes. She won't owe you any money. She'll have to rebuild her credit. That's why this is all about credit. So we're not going to mess up. She's a lawyer. I'm very experienced, just like you were doing this for 15 years. I explained all the times I had done it, all the many, many, many things I worked on. And I go, and so we're not talking about deficiencies to the bank here in California. We're not talking about credit. We're not talking about taxes because California mirrors the law. I go, so really it's just about credit. I don't understand why your client wouldn't do this. And he's like, okay, I'm going to call over. He tried to explain. He said a couple different things. Like, first it was like, this is a Chase loan, or it's a Chase servicing loan. But basically he was telling me whatever language he used, which didn't make a lot of sense to me, is that there was a decision maker that was part of the bank on this. The bank was the decision maker. And he goes, wait. Well, okay. And for what seemed like I was excited. So it seemed like a really, really long time. But I was like, I think, just from talking to this guy, I was like, this is the right guy. And this is what I was telling my clients for 5-7 years. If we get elevated and they're dealing with me, we have a very good chance to get your deals done. But the issue is I can't guarantee we're going to get elevated to people to understand the law. But I was like, this is the guy that we wanted, and we got it elevated. And I truly believe this was better for their investor than the alternative that I explained very clearly. And this guy came back to me and said, we'll accept your deed in lieu. So that is why I am not guaranteeing this to anybody. I told my client on this one, I said, I think there's about a 20% chance, given that you have a legit hardship here, and this is a good package, and there's a good, smart, generally they're smart over there. I said, but I cannot guarantee that. I said, this could turn into a short sale. And she was fine with that. She goes, well, then I'll get to live in a property for a year. And so it really was. That's what this was. Short sale, not now, or deed in lieu now, no credit damage. So for me, if you want to get started, like, you really don't want a short sale. In the beginning, it was only like 2 years of credit damage and you could start getting loans. But as it went on, it was longer. It could be 3, it could be 5. It depends on the bank. Some banks didn't want to consider it any different than a foreclosure. So like, if you're thinking you want to get out now, you've got California fatigue and you've got a little bit of extra money. And like, here's my thoughts. If you're unsure that you do the deal, then since I'm not even saying it's 50-50, I'm not sure you should pay an attorney to do a deed in lieu. But if you're saying, I want out on reasonable terms, if you can assure me I'm not going to owe the bank money and I'm not going to owe taxes, and I can't assure that for anybody ahead of time, but if I can tell you fit within the law, and therefore if you do it right, it won't happen. And I sort of made, if you go back in upsidedownrealestate.com, I made like stress-free guarantees that I would make sure that if you had afterwards, if you had collection people coming after you, I would send them cease and desist letters and things like that. So I will make, for the right people who fit squarely within the law and don't do fraud, I can make sort of stress-free guarantees. I'm a lawyer, so I'm not going to say guarantee might even be too strong a word, but I'd protect you with my legal skills. But if you're saying, I want out, and I'd like to get out on great terms, and if you can tell me we're not going to have to worry about the deficiency, and we're not going to have to worry about taxes, and it's just about my credit, and I could handle the credit problem after a short sale, but I prefer to do better, then I think you're the person that wants to start off with a deed in lieu. Now, there's another person that I thought about this a lot, and that's the person who knows, like, after most likely where we are in the market right now, if I list, I'm not going to get it. And so therefore, I'm probably short, but I'm not sure I want out. Well, for you, I'd say let's talk to an attorney like me first, see how we would set up the short sale, because you're the perfect person now for this. And maybe you're really like upside down. I consider your property is clearly worth less than you owe. Underwater is your property might be worth more than your loans, but you don't have the normal amounts to pay a realtor and closing costs. But maybe you have some money there if you got a good offer. So we list a little bit above the market. The realtors, whether it's me in Southern California or we work with a team, they agree that if they could sell the property, they'll avoid going short. Then they'll try to make sure the buyer's agent works for the right amount to avoid a short. So you list concurrently for not a short, but you start the file off as a deed in lieu. To me, that's another way to start this, because you might be able to get to terms. Like if we get to those terms where your credit's not damaged, then this has worked for you. So I think I covered this so thoroughly that I think the only thing left is that, if you're working with us and you want to go deep into this, you give us a call, we talk to you over the phone, and then we're like, okay, do you want to do some of this work? Let's go through this. Let's see what your situation looks like. And then I'll tell you how to sequence your loan workout and what results you'd have. And then I'd say, so therefore, if I think you're a good candidate, we'll go ahead and we'll look at the deed in lieu instead of or concurrent with a short sale option with you. And if you don't want to do a deed in lieu, we can always do a short sale. And if I think you're a good candidate, we could even, one of the things about short sales is what realtors learned over time was it was better to bring in a full-time short sale negotiator or someone who had already had credibility with the banks so they could elevate the files rather than just being the same realtor doing onesies and twosies. So in the end, people started working with short sale negotiators, and their fee was 1%. So on a typical 6% sale in a short sale, and they were 6% back then because there was the Mortgage Debt Forgiveness Act. Now it might be more negotiable because maybe you don't want. Well, I don't even know. I can talk to you about why that amount might not matter to you in your 1099-C if you have an attorney on their team anyway. But you would put a local short sale realtor on your team, but you'd start with an attorney, and I would certainly be there to advise you. I would certainly be there to review your approval letter. I would coach the realtor on how to do this and when and why and how much information we're going to give. We cross out a line in the short sale listing addendum so that you're not forced to reveal any information you don't want to be forced to reveal. And your realtor will get paid realtor fees, will get paid a percentage of those fees. And we might wind up also negotiating with the bank for you. And for that, that's the standard 1% realtor fee realtors were used to paying. Like this would not be out of your pocket. You can put, if you're doing a short sale in California, you can put us on your team as long as you contact us first. And then we can customize what you want and what your realtor wants, depending on how likely I think your short sale will be approved. So I would go to underwaterrealestate.com. You could also go to upsidedownrealestate.com, but you can go to underwaterrealestate.com and sign up. And if you're in California, someone from my staff or myself will talk to you about setting up a consult with us. That's free. And we'll go over your options and then how we would proceed from there. Thanks. Talk to you later. Bye. John McConnin. I'm an attorney and broker in California. Underwaterrealestate.com. Thanks.